Hey guys, Richard here. So before we get into the actual weekly watch list video, I do want to quickly announce that I'm starting a weekly stock picking contest, and all you have to do to enter is follow the directions on screen right now. Basically pick a stock, pick a buy point, and pick a stop loss, and fill out all that information and leave it on a comment down below on this video. And each week I'll go over the best performers from you guys before my weekly watch list video, and I think it'll be a ton of fun. And let's see who can win this week. And I'll be participating as well. My pick is banned. My buy point is the high of this day right here at 122, and my stop loss is 5%. So let me know what your picks are, and I think this will be a ton of fun. But without further ado, let's get into the weekly watch list video. What's going on, guys? My name is Richard, and welcome back to the weekly watch list video. Overall, there's 16 stocks on my radar for this week: Band, Chegg, Fiverr, LVGO, Net, Nvidia, Okta, Onem, Peloton, Quidel, Sedged, Shopify, Twilio, TXG, XP, and Zscaler. And for each of these, we'll go through the fundamentals in Marketsmith, which is sponsoring this video, and we'll also talk about the technicals in TC2000. And if you enjoyed my analysis, please go ahead and leave a like down below. And if you're new to the channel, go ahead and subscribe as well. But getting into it, let's go ahead and start with Band. And overall, this is a cloud-based software-powered communications platform. And looking at the earnings and sales, you don't see the huge sales growth the past few quarters that I like to see. But last quarter was very strong. Earnings were up 133%, sales were up 29%, and after-tax margins were up as well, 1.6%. And taking a look at the annual estimates, you can see that they're just supposed to be profitable in 2020, and in 2021, they're supposed to get a big boost, up 900%. The EPS rating is a 64. The Group RS is an A+. That's always good to see. The SMR rating is a D. Accumulation distribution is an A+. That's great. And the overall composite rating is a 98. And taking a look at the funds, you can see a big increasing trend from 63 2 years ago to now 300. That's a great trend to see. That's really what drives stocks prices up in the long term. And you've also got two high-quality funds investing in this company as well. Taking a look at the RS line, you can see it's pretty much been basing for the past few weeks, and it would be bullish for me if this RS line breaks out into new all-time highs before the price action does. That's always what I hope to see on a breakout. And taking a look at the technicals more in depth, let's go into TC2000. And overall, you can see I've drawn this resistance level in right here at 119.98, and I'm looking for a definitive breakout on volume. It's been trying the past few days and really hanging in there. But it hasn't yet been able to do that on volume. And overall, I also like that it's a recent green line breakout, and there's a ton of signs of institutional accumulation in these big volume days, and you had a bunch of them in a row. That's always the ideal thing that I want to see, and it's a good sign for the future of this stock. It's also been holding the 21 EMA, this purple line right here, which is always good for a growth stock in an uptrend. Moving on, we've got Chegg Inc., which provides digital products and services for online education. And overall, you can see nice earnings and sales growth the past few quarters. Earnings were up 47% last quarter, sales were up 35%, and after-tax margins were up a strong 22% last quarter. And taking a look at the annual estimates, you can see for 2020, they're up 23%, and for 2021, up a further 22%. So there's definitely a lot of growth expected for this stock. And the EPS rating is a 99, the Group RS is an A, SMR rating is an A, accumulation distribution is a B+, and the overall composite rating is a very strong 99. And from the fund ownership, you can see a nice increasing trend, and you have 5 high-quality funds investing in this company. And taking a look at the RS line, you can see it has been pulling back and going the wrong way, which isn't what I want to see, but the stock is approaching a expected level of support at the low of the breakout day. And if it can bounce off that support, that would be a positive. But if that fails, I'll be very quick to cut any position that I have at that time. Taking a more in-depth look at the fundamentals, you can see that it had a Bollinger Band bounce on this past Friday. So I would look to buy if it continues upwards and we have a green dot early next week. That would be a positive. And you can see that the expected level of support is around 53. So you can see it's about 7% from that level at this time, which is a little wide for a stop loss. So I would look to use maybe the low of this day right here, which was at 54.85 as a potential stop. There's also signs of constructive price action, a nice recovery on 527. But overall, it's just been falling on lower volume than the huge breakout. And really, this breakout to me stands out, and this is a sign of huge accumulation from institutions. So that is Chegg, and next up we've got Fiverr. And this is an e-commerce platform for basically digital services. And taking a look at the earnings and sales, you don't see earnings because it is not profitable at this time, but you have some solid sales growth, around 40% for the past few quarters. And you can see that it's not supposed to be profitable within the next 2 years. The EPS rating is a 46. The group RS is an A+. That's great. SMR rating is a D. Accumulation distribution is a B+. And the overall composite rating is a pretty strong 95. And you can see an increasing trend in the fund ownership, and you've got one high-quality fund investing in this company. And taking a look at the RS line, you can see it has been going flat after a huge run-up from this base, which was a stage 1, so it's still early stage. And I would like to see, as with the other breakouts, the RS line move upwards before it actually breaks out. That would be a positive. And taking a more in-depth look at the technicals, you can see that it had a huge run-up from the lows, and let's actually see what this price change was. So over 100%. So it really needed a break, and if it can consolidate nicely, stay above those key moving averages, that 50-day and 30-day, I think that would be very constructive, and that would potentially indicate another leg up. And also, you might notice that I have these teal dots here. This is another stochastic that I'm trying out. It's a little faster, so it might react a little bit quicker to price changes. And it's not quite ready yet, so if I determine that it's actually useful, I'll make a video about that as well. But anyway, the things I'm looking to see is a continued move up with potentially a green dot or Bollinger Band bounce. And I also like how it's been holding this 21 EMA throughout this entire move, this entire 100% move. It's been holding this purple line right here. That's very constructive. And you can also see that last week it was very tight. And actually, let's take a look at a weekly chart. You can see that for the past 4 weeks, it really hasn't moved that much. It had a failed breakout in there. But this is constructive price action and seems to indicate that's ready for another leg up. Next up on the list, we've got LVGO, another previous stock of the week. And you can see, taking a look at the last 2 quarters, very strong growth here. Earnings were up 133%, sales were up 115%, and after-tax margins were up as well. And taking a look at the annual estimates, you can see it's not supposed to be profitable in 2020, but it is supposed to be in 2021. The EPS rating is a 76, the group RS is an A, SMR rating is a C, accumulation distribution is an A-, and the overall composite rating is a very strong 97. And you can see a nice increasing trend in the fund ownership, and you've got one high-quality fund investing in this company. And taking a look at the RS line, you can see it's also basing as it's been pulling back. So once again, I want to see this move upwards once again, and then see a definitive breakout. And taking a look at the chart in TC2000, you can see that on the weekly, it's been very tight the past 5 weeks. And taking a look at the daily, you can see that I either want a green dot, a break above this level at 63.55 on above average volume, or potentially a bounce off one of these moving averages. So those are the entries I'm looking to use. And next up, we've got Net. So Cloudflare develops software for firewall routing and traffic optimization. You can see it's a recent IPO, and it's not yet profitable, but you do have very significant sales growth here, up around 50% for the past few quarters. You can see it's not supposed to be profitable yet within the next 2 years. The EPS rating is a 22, the group RS is an A+, SMR rating is a D, accumulation distribution is a B, and the overall composite rating is an 84. And taking a look at the fund ownership, nice increasing trend. You've got 3 high-quality funds investing in this company. And taking a look at the chart, you can see that the RS line is also kind of basing, although it is decreasing somewhat, but you've got overall an RS rating of 95, which is very strong. And taking a look at the chart, you can see that it has been pretty volatile recently, although it is tightening up now. And I actually tried this earlier, but I did get stopped out, I think, on this down day right here. But overall, I'm looking to use a green dot entry setup, a Bollinger Band bounce, or a breakout above this resistance level at 30.59. So that is my plan for Net. And moving on, we've got the next stock on our list, Nvidia. So for me, this is the leader compared to, for instance, AMD in the semiconductor space. And overall, you can see it's got very strong earnings and sales growth the past few quarters. Earnings were up 105%, sales were up 39%, and after-tax margins were up as well, 36.4%. So very strong growth there. And taking a look at the annual estimates, you can see that in 2021, the estimates are up 41%, and in 2022, up a further 21%. The EPS rating is a 99, the group RS is an A+, SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a very strong 99. And taking a look at the fund ownership, nice increasing trend, and you've got a whole bunch of high quality funds investing in this company. And taking a look at the RS line, you can see it is pretty much flat over the past few weeks, as this has been basing after a huge run up because this is one of the best performers coming out of this correction. And taking a look at the technicals, you can see that the stock did have a failed breakout here, but it fell right back into the base. And I'm looking for either a strong definitive breakout on a huge volume above this 367.27 level, or a green dot or other potential bounce entry. So that is Nvidia. And moving on, we've got the next stock, Okta. Taking a look at their earnings and sales, you can see once again it's not yet profitable, but you have solid sales growth around 45% the past few quarters. And taking a look at the annual estimates, you can see it's not yet supposed to be profitable in 2021 or 2022, although it's getting there. The EPS rating is a 57, Group RS is an A+, SMR rating is a D, accumulation distribution is a C, and the overall composite rating is a 92. And taking a look at the fund ownership trend, nice increasing trend from 317 to 891 over the past 2 years. And you've got 4 high quality funds investing in this company. And taking a look at the RS line, you can see it did peak a few weeks ago, and right now it's going flat to slowly decreasing, but it could move up after this pullback if it recovers. So taking a look at the technical setups that I plan to use, it's looking like it formed a higher low right here after this prior higher low on 527, and I'm looking to enter on a green dot entry or a move above this pivot at 187.99. So moving on, we've got ONM, which is similar to Teladoc. It provides online doctor services. And taking a look at the earnings and sales, you can see it's not yet profitable, but you do have some decent sales here, not the strongest, and they are decreasing over the past 3 quarters, but still okay for an IPO. And taking a look at the annual estimates, you can see it's not yet supposed to be profitable. The EPS rating is only a 6, Group RS is an A-, the SMR rating is not available, the accumulation distribution is a B, and the overall composite rating is a very poor 51. So this is more of a speculative play, although even with these ones, you have to practice good risk management. But overall, you can see it has 174 funds, and it's got 2 high-quality funds as well in there investing in this company. And taking a look at the RS line, you can see it has been decreasing a whole bunch as it's been pulling back, and what I'm looking for is a bounce off the prior pivot at 28.58. Taking a look at the chart in TC2000, you can see that this is actually a green line at 28.58, and often these lines provide very strong support. You can see it bounced off right here and looks like it undercut it and then moved above it on Friday. And if we take a look at Twilio, which we'll get to in a second, but this is a good example, these green lines can provide very strong support. You can see at 71.52, this was the green line all the way back from its IPO price. So you can see it bounced off it right there and then went on a huge run. So this is what I'm hoping to see from ONM. And as for entry setups, I want to see a green dot. So even though I'm playing the bounce, I want to see it move up strongly on volume before I would enter. And other than that, potentially a green dot or a move above this pivot at 33.92. So that is my plan. And next up, we've got Peloton, another recent IPO. And taking a look at the earnings and sales, you can see it's also not yet profitable, but you have very strong sales growth the past few quarters, up 66% last quarter, and after-tax margins were negative. And taking a look at the annual estimates, you can see it's not yet supposed to be profitable within the next 2 years. The EPS rating is a 13, the Group RS is a C-, SMR rating is a D, accumulation distribution is an A-, and the overall composite rating is a very poor 67. But you do have 3 high-quality funds in here and an increasing trend overall. And taking a look at the RS line, you can see it is pretty much basing at this point as the price action does the same. And taking a look at the chart, you can see that the 49.68 is the pivot that I'm looking to use, or I'm looking to enter on a green dot or Bollinger Band bounce. So moving on, we've got Quidel, which develops rapid diagnostic tests for infectious diseases. And taking a look at the earnings and sales, you can see accelerating earnings, accelerating sales, and margins as well. So that's great to see. And taking a look at the annual estimates, you can see that you're supposed to have huge growth this year, up 132%. This is a breakout year, as Mark Minervini calls it. And in 2021, you're supposed to grow as well, up 11%. The EPS rating is a 97. The Group RS is an A. SMR rating is an A. Accumulation distribution is a B+. And the overall composite rating is a 99. And taking a look at the fund ownership, a nice increasing trend in funds. And you've got 4 high quality funds as well investing in this company. And taking a look at the RS line, it has been decreasing recently, but last week towards the tail end, you see a big jump in this RS, which is always good to see. And taking a look at the technicals, the entry step that I plan to use for this is either the green dot if it acts well on Monday from the Wednesday green dot, or a break above this prior pivot at 176.83. Next on the list, we've got SEDG, which is a Israeli solar power company. And taking a look at the earnings and sales, you can see very strong growth the past few quarters. Earnings were up 48% last quarter, sales were up 59%, and after-tax margins were up 11.7% as well. But taking a look at the annual estimates, you can see for 2020, it is supposed to be down 31%. That's a negative for me, but it's supposed to pick right back up in 2021, up 50%. The EPS rating is a 99, the group RS is an A+, the SMR rating is an A, accumulation distribution is a B+, and the overall composite rating is a 99. Taking a look at the fund ownership, nice increasing trend, and you have 3 high-quality funds investing in this company. And taking a look at the RS line, you can see it is moving up at this time as it forms a slight pullback and acts well even as the overall market is pulling back. And taking a look at the entry steps that I plan to use, it is right at this green line right here, so I want to see a move up on volume through that line or a break above this prior high at 152.93, or potentially a green dot entry setup. So that is my plan for Sedged. Next up on the list, we've got Shopify, which is a cloud-based e-commerce platform. And taking a look at the earnings and sales, you can see nice growth the past 2 quarters. Earnings were up 217%, sales were up 47%, and after-tax margins were up as well. For 2020, the estimates are down 5%, but it's supposed to have good growth in 2021, up 37%. The EPS rating is a 76, the group RS is an A+, SMR rating is a C, accumulation distribution is an A-, and the composite rating is a 98. Taking a look at the funds, nice increasing trend, and you have a whole bunch of high-quality funds investing in it as well. And taking a look at the RS line, you can see it is decreasing, although it moved up towards the tail end of last week as it is pulling back right at this 20% profit zone in Marketsmith. And taking a look at the technical entries that I plan to use for this stock, either a green dot entry setup early next week if it acts well, a break above this prior pivot at 784.30, and eventually hopefully a breakout into new all-time highs at 844. Next up on the list, we've got Twilio, which was my stock of the week this past Friday. Taking a look at the earnings and sales, you can see that it doesn't have explosive earnings, but they are accelerating the past few quarters. And the sales growth is very strong, up 57% last quarter, and the after-tax margins are positive. In 2020, you can see it's not yet supposed to be profitable, but it is supposed to turn a profit in 2021. The EPS rating is a 44, the group RS is an A+, the SMR rating is a C, the commission distribution is an A-, and the overall composite rating is a very strong 97. Taking a look at the fund ownership, nice increasing trend, basically tripling over the past 2 years, and you've got 4 high-quality funds investing in this company. And taking a look at the RS line, you can see it is sloping downward right now as the stock is basing, so I'm looking for this to start move up and hopefully for this stock to continue upwards as well. And taking a look at the technicals, you can see that's been very tight the past few weeks. Let's go to a weekly right now. You can see that over since basically a month ago, it really hasn't moved up 1.41%. That's a solid base and pretty tight action. And overall, taking a look at the daily, you can see that the entry steps that I plan to use are either a green dot entry or a break above some prior resistance levels, for instance, at 205, or taking a look at this high around 210. And I like the price action. You can see a huge gap up on a huge volume, a sign of institutional accumulation, and it's been holding this 21 EMA for this entire run. And if you want to know a little bit more about the price action, I talk about that in depth in my video, so go ahead and check that out. Next up, we've got TXG, which develops instruments, consumables, and software for analyzing biological systems. And immediately what caught my eye when I was looking at this recent IPO was how many high-quality funds were investing in this company. This is very unusual, at least in my mind, for a recent IPO. So this really stood out to me, and the price action seems like it's constructive, although it is below its prior all-time highs. You can see it's not yet profitable, but the sales growth is decent, although it is decelerating, and it's not supposed to be profitable in 2020 or 2021. The EPS rating is a 16, the group RS is an A, SMR rating is a D, accumulation distribution is a B-, and the overall composite rating is a 70. And taking a look at the funds, nice increasing trend. And as I already said, a bunch of high quality funds investing in this company. And taking a look at the RS line, you can see that it is kind of decreasing at this time, and I want to see this move up and break above this prior level right here. And taking a look at potential entry setups, I want to see a break above this prior resistance level at 86.90 or a green dot, and eventually I want to see this challenge the prior all-time highs. So that is my plan for TXG. And moving on, we've got another recent IPO, XP. And taking a look at the earnings and sales, you can see nice growth here. Earnings were up 92% last quarter, sales were up 39%, and after-tax margins were up as well, 23.9%. You can see for 2020, it is supposed to be dropped down 49% in terms of annual EPS, but it's supposed to pick right back up in 2020, up 36%. The EPS rating is a 99, the group RS is an A-, the SMR rating is an A, accumulation distribution is a B+, and the overall composite rating is a very strong 98. You can see that funds have been decreasing over the past 2 quarters and doesn't have any high-quality funds investing in this company. And this is somewhat of a warning sign for me, but the price action the past few weeks has been incredibly strong. And taking a look at the entry setups I plan to use, it is a potential green line breakout next week with a breakout level of 43.52, and I want to see that happen on above average volume. But with a lot of stocks that are right near its breakout level, I would expect to see some consolidation right here, especially since it's had a huge run up from the bottom. And if it does form a consolidation here and forms a green dot, that would be a potential early entry into this stock. So that is XP, and last on our list, we've got Zscaler. So Zscaler, and I kind of laughed when I read this description, operates a massive global cloud security architecture and delivering service. And overall, you can see decent earnings growth the past few quarters. Last quarter up 40% in terms of earnings, sales were up 40%, and after-tax margins were up 8.2%. You can see that it's supposed to drop down in terms of annual EPS in 2020, but it's supposed to pick right back up in 2021, up 30%. The EPS rating is a 47, the group RS is an A+, SMR rating is an A, accumulation distribution is a B+, and the overall composite rating is a 96. And taking a look at the fund ownership, you can see a nice increasing trend. You've got 2 high-quality funds investing in this company. Taking a look at the RS line, you can see it has been going flat after this huge gap up on earnings. And let's go over to TC2000 and talk about entries. So overall, I really like the constructive price action after this huge gap up on EPS, which was a green line breakout. So this could be the start of another long-term trend like what happened in early 2019. And overall, it has been very tight, and I don't want to see it break below this 21 EMA as it catches up to the price action. And I'm looking to use a green dot entry or a break above this resistance level at 108.97. So that is my plan for ZS, and ultimately, I do want to have it break out into new all-time highs at 112.73. All right, so that is my battle plan for this upcoming trading week, and my top 3 picks are Band, TWLO, and also LVGO. So if you only want to focus on 3 stocks instead of 16, that is my kind of preferred list. But thanks so much for watching. Please remember to leave a like down below if you did enjoy, and subscribe if you're new. And best of luck this week, and I'll see you guys in future videos.